Hey, this is Tom Nash, and inflation data came out today, and it's actually a little bit hotter than expected. But as you noticed, the stock market did not make a big fuss out of it. I'll explain in a second why, what this means for rate cuts, when, how much, and what it means for the stock market for the rest of the year. Now, CPI data came in at 3.2%. which is much better than our last stop, which was 3.9%, but not as good as expected. The expectation was just slightly better at 3.1. So we came in at 3.2 versus 3.1. Core inflation, which excludes food and energy that have more volatility, came in at 3.8 instead of 3.7. So on both counts, inflation came in just slightly hotter than expected. So the question that everybody asked me in the DMs following this report is what happened to the dip? Because usually when the stock market sees an inflation report that's a little bit hotter than expected, we have a nice little dip in stocks and we get to buy cheap. That did not happen today, and I'll explain why. For good reason, because essentially this shows us that we are on track for 2.4, 2.3, maybe even 2.2% inflation by the end of the year. And that's a good thing. It also means that we are on track currently to June or July reduction of interest rates. I know everybody expected them in March, but that got completely sidetracked once we didn't have the inflation reports that we needed for that. But now this report shows, because we dropped from 3.9 to 3.2, it shows us that we're headed to a June or July rate cut. Now, if you look at the Fed CME watch tool, there's about 62% of a rate cut in June. And if you look at July, 84%. So basically, currently, what this report shows us that by June or July this year, in 3 or 4 months, we're going to have a reduction in interest rates. That means that we're going to have lots and lots of money flooding the market. That means that the $6 trillion we have parked in money market accounts, essentially sitting on the sideline, will back into play with those interest rates being cut. Essentially, this is going to be the money printer turning on again, sort of. Now, there's a lot of moving parts here, and nobody really knows exactly how this thing is going to play out. But this essentially shows us a few things. The reason the market didn't absolutely tank, but it also didn't jump up in joy, is because this report shows us that this is not the end of inflation by no means, but we are seeing actual progress, and actual progress after some hardships. We didn't see a spike again. Now, Fed will have to cut rates. There's no doubt in my mind. Everybody understands this, but the question is when. Most likely June or July. That is getting priced in right now, essentially keeping the market pretty much at calm, because that's pretty much what's already been priced in for months. Now, the meeting is actually going to be on March 20th. Meeting, I mean the FOMC meeting, in which they officially will decide, but that meeting, I can tell you right now, 0% of rate cut. I don't care what anybody says, there's not going to be a rate cut in this meeting on March 20th. Now, I can also tell you that the next meeting, which is actually in May, also probably won't have a rate cut. 99%, we're going to see it in June or July at the latest. Now, here's the thing I want to talk to you about. We probably will see 2 or 3 rate cuts this year, starting from June or July. Now, the reason we're going to see 2 or 3 rate cuts, unlike what the experts are saying to you, is because you have to remember we're heading into an election. Now, when you're heading into an election, officially, the Federal Reserve should not have any sort of interaction with the political aspects of the policy that they're actually putting down in the market. So, on theory, how should I put it without getting too blunt? On theory, the monetary policy of the Central Bank of the United States should not be determined by any political considerations. But if you go back in history and you look at election years, you'll find out that the Fed has a very accommodative policy, usually in an election year, really running up to election. That's why they call it election economy. Everybody does it. Every country does it. The United States is not going to be different. To think that the Federal Reserve is going to go hard and absolutely prevent the market from going all out before an election, it's not probable, especially with inflation numbers that are quite comfortable. Now, look, the bottom line here is very simple. We have plenty of evidence that inflation is coming down. The market will react to it positively. Once we have rate cuts, we're going to see more money coming into the market. Bitcoin is going to do well. Equities are going to do well. The entire market is going to do well. It's going to be a good bullish cycle. But don't forget, in any bullish cycle, there's always pullbacks. There's always corrections. No market in history has ever just gone up in a 45-degree angle. In fact, statistically speaking, I'm going to remind you, in every good bullish year, the S&P 500 drops 5% at least 3 times a year. And if you're holding volatile stocks like a Tesla, like a Palantir, like Bitcoin, you're going to see a lot of volatility. Volatility is good when the market is bullish, but when you have corrections, volatility means that if the market drops 5%, your stuff will drop 15%. So you have to have the stomach for it. You have to be ready for corrections, for pullback. It's not going to be a straight line all the way to $150,000 for Bitcoin. Remember that. Now, what do I do in order to handle this volatility, in order to prepare for this, given what we're seeing today? Well, look, you have to buy stuff when sentiment is negative. Buying stuff when sentiment is at peak, you're still getting a good product, right? If you overpaid for a great car, you still get, you drive a great car, obviously, no problem, but you overpaid. What if I could give you that car at half the price, about a third the price? That would be even better, right? Who would refuse that? So here's the thing. When I was talking to you and when I made the video about SMCI in 2023, when I made the video about CrowdStrike in mid of 2023, when I was talking about NVIDIA in the beginning of 2023, when I was talking about all these stocks that went up ballistically, what I've been giving you is a deal that's a lot better than what you have right now. SMCI at $250, which is exactly what we had when I posted my video, is a hell of a lot better deal than SMCI at $1,000. It's not a good deal, especially when the market is getting hot. In fact, statistically speaking, when you have high PE, price to earnings ratios in the overall market, in the S&P 500, north of 25, if you have north of 25, 25, 26, 27, all the way to 30, your chances of making money in the market in the following 3 years go down dramatically than 20 to 15, 15 to 10. So right now we're operating at 24 PE market. It's a very, very high threshold. You have to look for bargains, for things that are negative sentiment. That's what we talk about on our Patreon group. That's what we talk about on our Discord. That's what we talk about in the Academy. We teach you how to identify things that have a lot of upside. The idea isn't to buy at the top. You have to identify things when they are unwanted, undesirable. You always want to buy when there's blood on the street. You don't want to buy when everybody's excited and FOMO into something that's at its peak. So right now, all these stocks like NVIDIA, like SMCI, like CrowdStrike, they've all popped and that's great. And perhaps they continue to pop, who knows? But right now I'm looking at Tesla. Tesla is taking a beating right now. Absolutely beating, getting hammered. Buying Tesla at this price level with a $1,400 price target, which is what I have, a nice little 10x suits me fairly well. Now, again, just my opinion. It ain't financial advice. You have to do your research, your decisions. Maybe just be rambling out here like a madman. You know the drill. And obviously, you're invited to join our Discord group, discord.gg/TomNash. Join us. Let's talk about potential opportunities in this market. They're not easy to find, but they're out there. Some, like Tesla, are evident. Others need a little bit more research. Join us. And obviously, join, if you want to take the next step, join the Academy, patreon.com/academy. I don't have any stock tips for you there. I don't tell you what to buy, what to sell. That's all free on my main channel. And that's out there for everybody. I share methods, technique, system, process. I teach you the tools, not give you the fish, so to speak. So patreon.com/TomNash. Join the Academy, try it out. And as you saw yesterday I was doing a stream with Jesse Dow and we're talking about PayPal. And I showed him Stock MVP and how Stock MVP literally gives you everything you want to know about a stock in 30 seconds. He was mind blown by it. We talked about it after, we talked about it off air. He's absolutely excited. Now, you can try it out for 1 week for free. And bonus, for those who are watching this video, a special bonus. Just for this video, it's not going to come back again. Last 50. Use that code. You can get it for 50% off for a lifetime. But that's going to be just for this video for the next 24 hours. After that, that goes away. Try it out. And don't forget, you have 1 week for free to try Stock MVP. Don't like it? Cancel. No problem. No harm, no foul. I'll see you in the next one.